Good morning, trade pros. Hope you're all having a great day. Good morning to you too. Good morning to our trading room. Good morning to everybody. Hope the weekend treated you well. You got some rest. Mine was pretty interesting, but still restful, and things are good. Batteries are charged up. We got a few things to talk about this morning, so I'm going to let's kick things off. I'm going to stop the screen share for one moment, turn the camera on, and let's see how it looks. It looks pretty terrible. I like it. Terrible, just the way that I like it. Let me just adjust it a little bit. All right. You guys like my car shirt? This is kind of ode to my kids. All right, so let's kick things off. This weekend was fairly volatile in news events and, well, not volatile, but fairly eventful in news events that came out. But the first thing I want to talk about today is that we are officially into the contract rollover for S&P 500 futures. So we're going from the March contract, which was the H, to the M contract, which is June. And just remember hummus, HMUZ. Hummus it's a little different. It's not the exact same, but H is March, M is June, U is September, Z is December. So we are going and rolling forward to the M contract. So the second week of the expiry of the quarters, so March, June, September, December. Second week, a lot of people will start to roll forward on the Thursday, but the third week on the Friday is official expiry, and so they expired this Friday coming up. Many traders have rolled over already to the new contract. I'm making the switch this morning for the whole new week here. I'm trading the M contract, the EPM or ESM, depending on your data feed and the symbology architecture behind it. The volume is 204,000 as of the time I clipped it. It's higher now. 204,000 on the June and 228,000 on the March. So for the purists, technically there's more volume on the March, but where everyone is looking forward to and has switched now to the M, and by then the session, I would imagine there's more volume on the June, and by tomorrow morning for sure there'll be more volume on the June. So the switch has happened. We're changing. You have um, a new price that's going to be significantly higher than before. All right, meaning that I think it's up like 35 or so points. So make sure that your main chart that you're trading off of, not your order flow stuff, but your price charts have a continuous contract. So if you want to look back, you could see the data in a continuous format and you don't have any gaps because the futures are listed 6 months ahead of time. Sometimes even longer. You'll have a lot of weird price action. If you just switch to just the June contract, go back, it'll look weird. Continuous contract on the main price chart will give you a smooth amount of data. In the past, I don't back adjust prices. I just have a continuous contract, good enough. And this morning I went in and redrew all the levels because the levels were off of the M contract. They didn't really correspond 100% to the June. I didn't like how it looked, so I deleted everything and I started fresh and redrew my levels. All right, so today's gonna feel a little bit weird because you're used to seeing these levels like 67.20, but that 67.20 now like 67.50. It's gonna be a little bit odd. There's a bit of an adjustment period when you roll over for sure, 1 or 2 days to get your feet back running on the ground. So yeah, that's a very important update right there. All right, snapshot of the futures, mostly higher overnight after printing a gap lower in the Globex reopen at 6 p.m. Eastern. Yesterday, futures reopened and we had a gap lower of about 19 points. We erased that gap and we rallied back upwards. All right, everything's up across the board. NASDAQ is kind of leading the way. Um, Dow is the least up. NASDAQ is the most up, 0.4%. All right, we got a softer dollar in terms of uh, the FX market. So softer dollar provides a bit of um, a tailwind to risk. All right, so we're kind of going a little bit more risk on as well. We have FOMC this Wednesday, which is the Fed. Rates are expected to be unchanged at 3.5 to 3.75. All right, no cut is priced in until Q4 of this year, but it'll still be interesting at this meeting to hear the update of the dot plot, the SEP standard economic projections from the Fed, and any commentary that they have during the press conference. All right, this will be Jerome Powell's second last quarterly Fed meeting that he's going to chair. And then we go into the transition into July. So he has one more in June. So Jerome Powell's kind of knowing that he's going to be replaced, loses a little bit of his umph in these situations, especially because price cuts are all the way out later on in this year. So It's going to be a bit of an odd Fed event as well, but it's going to be this Wednesday. We're going to be looking for dot plots and economic projections. I'll keep you updated on that. Wednesday morning, you'll have your full morning market update. It'll fully focus on the FOMC. All right, oil and geopolitics. I mean, I feel like this is just the theme of all themes right now is the dominant thing that's going on. All right. WTI was back above $100 a barrel on the open on Globex. Trump confirmed that U.S. strikes on Iran's Karg Island. And if you don't know what that is, it's the primary export hub for oil. And there's also talks that he's weighing of seizing the entire island, but he said it would require boots on the ground, which would for sure extend his timeline that he gave before this operation started. All right. New Iranian leaders apparently got hit with the strike over the weekend, and he is believed to be in a coma. I don't know what's happening there. So, the situation is going to carry on this week. There's no resolution expected right off the hop, so you're going to have to price that into your trading strategy. All right. But this is going to be another week this goes on for sure. Dollar index is pulling back from year-to-date highs. Okay. One really important thing in the FX markets is the dollar Jap yen, USD Japanese yen currency pair. It's choppy, but it's around 159.17 to 159.75. 160, you guys will remember I've been blabbing about this a lot. I don't know if many traders are talking about this, but the ones on the desk sure are. Japan is flagged and said that they're ready for decisive FX intervention. That 160 level is their trigger point. Any Japanese intervention could have an impact on the S&P 500. The greater the intervention, the greater the actual quote and the trade blows through that 160, the greater the blowout, the more impact on the ES. So we have to start focusing on this because it's coming up. All right, metals and crypto, gold is down a percentage point. It's risk on, so gold's being sold off. Copper is down. Bitcoin briefly broke 74,000, a bit of a bit in there, but then pulled back from the highs. Ethereum up 4.1%, outperforming pretty much everything in the crypto space. And then last but not least, on today's update, we got US and China trade talk. They spent 6 hours talking in Paris on Sunday. Both sides described it as candid and constructive. All right. Talks to resume today. Um, Watch for some headlines there as well. So you now have kind of two events. Obviously, the one that's overrunning everything is Iran and oil. And the second headline now is U.S. and China trade talks. Some developments there could create tape bombs or sudden events that need to be priced into the market. So be careful today. Be on the listen. I was going to say lookout, but be on the lookout and the listen for any updates. That's why I have the news squawk perpetually running, and I ignore it 90% of the time until 10% of the time I can't listen to anything but it because we had a major game-changing event. These are the markets we're trading in, right? Minute to minute, the entire bias could flip, the sentiment could flip, something new could come in. This isn't a surprise, all right? This is how it was 4 years before this 4 year cycle, all right? And the Trump administration creates volatility for the markets. It's both a blessing and an extra workload for you to keep an eye on. So, not saying that taking the politics out of that statement. All right. I don't want to trigger anybody. You guys know I'm not about politics. I'm about unity of people and bringing everyone together through markets. So, there's no political intention behind that statement at all. I'm just saying it is much more volatile trading under Donald Trump's administration. It's factual. Go look at the markets. Um, but that's how it goes. Things could change on a whim. So, that's the update this morning. Some of the catalysts to watch. We got industrial production numbers. We'll go and take a look at the event calendar in a second as well as part of a morning market update. Let's get down to it and let's get started. All right. So I'm going to just close the camera, turn around and share the charts for the last time. I am no longer going to share live charts on YouTube updates. I am going to be doing them as a fixed screenshot. Don't want to even tell you why, but just put it this way. I have no intention of redistributing CME data or paying the fees associated with that. No, thank you. All right, so I'm gonna share the screen for you. All right, here it goes. This is a screen, and you know what I'm gonna actually do? I'm gonna do this, and then I will screenshot it by doing this. All right. And then watch this. And then I am actually going to pull up the screenshot of that. There you go. Problem solved. I'm just, it's a crazy industry. I'm just trying to, keep my bearing to myself. So, let's talk about the plan then this morning and what we are going to be doing our trading plan. And let's go over the story for the US and the overnight session, and then obviously into the trading plan. The trading plan is so simple, it's actually laughable. All right, so here is the story. Oh, all right. Well, you can't see the notes today. I'm sorry about that, but I'll talk to you about them. All right. This week, like I said, is contract roll forward from H to March. So we're going from H to M, March to June. The price quotes will be higher numbers, and this might throw you off a little bit. It's okay. It's part of the industry. It only happens 4 times a year. Settle down. It's not that big of a deal. All right. I've adjusted the levels, but the story today will be in different numbers. So as I tell you the story for Friday, that's not actually the levels we traded because Friday we traded the March for the last time. Today we're starting with June. These numbers aren't going to 100% line up with the real story that happened on Friday. It's kind of like telling it from a different voice. So the open was 67.57 quarter on the market, and we saw a bid almost instantly off the open and a retest, and up we go. And up we went enough to kind of break the flip zone, which was the equivalent of where we are now, just slightly lower. The flip zone would have been like here, right? Just enough to break the flip zone and head fake higher, but we did set the prior day high at 67.87 quarter, and then the sellers just woke up. All right, the sellers took over and hammered the market lower. We always say that bear markets open strong and close weak, and bull markets open weak and close strong. So the fact we had that rally early on was indicative that, hey, you know what? We got some buy stops coming in from overnight. Let the buy stops get washed out, let the price go up, and then the seller gets really excited to come off the sideline and start trading in the auction because they got a nice little juicy spike in prices that they can hit over the head. And that's the trend. Right. So we saw the bid to the prior day high, sellers took over, rallies kept getting sold all day long. The head of the market couldn't pop up above the water before getting dunked again. So we damn near drowned the thing. And the low of the day ended up being 66.74 three quarter. All right. And then we got a little bit tiny cute baby bid into the close, into the 87 quarter. So overall, the range for the day was 112 and a half points. We had a failed rally above a flip zone that turned bearish. All right, the volume was 3.27 million, but it's kind of it's not really accurate volume because a lot of that volume is rollover. What happens is people will sell the March and buy the June, and you'll show up on both contracts, right? You sell, let's say, 50,000 minis and you buy 50,000 June after you sold the March. So that's 100,000 of volume combined on the continuous. So the continuous was 3.27 million, but the H volume was 2.39 and the M volume was only 735,000 contracts, more similar to what NASDAQ would trade. That number is going to change today. And then by the end of this week, there won't be split volume numbers. It'll just be all one contract because H will go down in history. You will never trade the H25 ever again. This week, it's time to let go of the H contract for 2025. All right, that's the story of the US session. The overnight story is fairly simple. We gap lower by about 19 points. We set the overnight low at 66.60. It's actually slightly even lower than that. The overnight low is, where was it? 66, let's call it 66.60, was overnight low. It was a bit lower, I think 66.57, around that. There's a reason and a discrepancy between that. I'll explain later. Doesn't matter though, it's close enough for now. All right, buyers took over, closed this gap fairly quickly. We didn't get the 10 p.m. rally that we're used to seeing. It actually rallied up into 10 p.m. Almost immediately, this gap was a buying opportunity that took us higher and higher and higher. And we got above the prior day cash close, above the prior day low. We closed the gap pretty quickly, and we just continued on upwards. Um, this could very well be a buy stop rally. We finished very bearish on Friday. We haven't erased all of the price action from Friday, but we're damn near erasing it from the open. All right. Contracts total volume at the moment is 279,000. It's pretty low. The market's kind of settling in. I bet you the overnight volume for the M is probably around 400,000, 300. So it's a little bit higher, but still not as elevated as usual because we're going into the Monday reopen. All right, the trading plan is fairly simple. The 6780 slash 85 ish area, this little yellow box, is kind of the flip zone. I flirted with a few ideas. I flirted with going 6700 as the flip zone, but it puts me in a long position right off the open. And we already know that what happens overnight isn't really carried over into the following session for the US Open, right? We typically get a reversal of what happens overnight. So I didn't really want to be long, considering how bearish this day was on Friday. I wanted to give the markets a chance to prove to me that they have the strength. And I'll give up any opportunity to get long and give up any profit potential up to the 80 from the 55, all right, which is about 25 points. I'll give up 25 points of upside until it's confirmed enough for me to actually try it with higher probability. I'll say I'll chalk up the 25 points that I'm giving up of gain potential to confirmation. It's not that I'm giving up 25 points. I'm waiting 25 points worth of confirmation. If I'm going to buy weakness in a bull setup and a bull sentiment, if I'm going to flip to being bullish in the first place, I want to see the bulls come out and I want to see some proof. And then I'll get the confidence to get on board. But it'll take about 25-point rally to exceed the flip zone and get me on there because now we've taken out a previous top. Now we've taken out the level that the bulls thought that they had on Friday that failed epically. And to me, up there has higher edge for the long opportunity, despite the fact that you're paying higher prices. What you're doing is creating the acceptance in the market because that is what acceptance is. All right. If we're going to continue higher, you should get people willing to pay higher prices. If people aren't willing to pay higher prices, why the heck are you bullish to begin with? And I don't think below this price, people are paying higher prices because they're bullish. I think below this price, people are stopped out of shorts from last week. And so the conversion or the flip zone for me is above here. I think people are actually getting long on risk on. Whereas this little rally overnight with this gap that failed is more of a buy stop run and just clearing out some liquidity from the short side from last week. All right. And that's very important to note. I'm not confident buying into a buy stop run. I want to buy into risk on levels and people who are buying to hold and buying to add and accumulate positions, buying to rebalance and to rehedge their portfolio. I don't care about buying into buy stops. That's a fade. All right, that's why the flip zone is there. It's a big one. So sell interest levels that are pretty simple. 52 right here, right now. Depending on how we open, this could very well be the level of the first trade, but we wait for the order flow. I'm not here to just predict the level and then close my eyes and put the risk out and then get stopped out and wonder why I don't feel confident in that setup because the auction never supported it. A level is a level. A level is nothing more than interest. All right, but the trade has to be qualified on order flow. So 52 is a level of interest. All right, so having said all that, 67 is a level of interest. One, two. And then the last one is the 80 to around 85 is the last level of interest for the short. Now, one of the traders in our room on Friday said something very fantastic. He put something into words that takes a lot of experience and knowledge to say such a simple thing that's so potent and true. He said, I don't really want the last trade in the flip zone because if I'm looking to get short and we're right at the last short level before the buy stops and we trigger the bias or sentiment flip, that means the market just isn't that weak to begin with if you're looking for the bearishness, right? It ain't that weak. I don't know if I could say who it is because it's private. It's in our community, but starts with a J. So J man, good work. That was one of the wisest things. I gotta be careful how I say this. One of the wisest things I've heard you say, and I've heard in a long time. All right. So that's the plan today is sell some rallies, but let's wait for the open. Remember, it's Monday. There's a lot going on. A lot happened on the weekend. We have a Fed coming up on Wednesday. We have an Iranian escalation. We have a China-US discussion on trade. We have a rollover period where irrelevant of market levels, you're going to be squeezing out some last traders into repositioning. They did it mostly last week. Most institutional traders would have already rolled, but If anyone hasn't rolled yet, they're gonna look for butter for their rolls today. They're gonna look for the opportunity to do it, and it's doesn't care about your support. Doesn't matter that you got a little cute zone with some buying balances and you're trying to get short. If they got to buy it back, they got to buy back. They're running out of time. They have this Friday before it expires, and then tomorrow, the day after, volume's going to flip. So they're running out of volume before they run out of time. All right. So just be careful. Today's going to be a bit of a kind of day. Everyone's trying to get their footing behind them or underneath them for the rest of the week and for this contract roll. So that's what I got for YouTube. Let me see what you guys are saying here. Morning, Hector. Morning, Marco. Good morning, Prashant. Um, OTM. Yeah, it was black for the 1 second that you showed up. Probably like 10 seconds because I was switching from camera view to screen share. Um, it's 2026. Yeah, I forgot it's 2026. Well, you know what? Prashant, it still holds. The H 2025 is over regardless. The reason is because it was actually loading H 2025 from last year because I went really far back to redraw these levels. And I guess I anchored to that. It's 2026. So yeah, you got to make odds with the fact that you're never going to trade March of 2025, but you've had a year to get over that. Now you got to get over the fact that H 2026 is gone as well as of right now officially, and we're onto the M 26. That's how you know you're old when you get the year wrong, right? Love you guys on YouTube. Have a great rest of your day. I don't know what I clicked, but I lost you. But I don't think you lost the stream. So take care. Love you guys, and I'll see you tomorrow. All right. Trade pros in the room. Hang tight. Let me do some magic here and turn the live stream off. YouTube, I lost you. I can't see the comments. It just reloaded weird. But I love you guys nonetheless. And have a great day.